Hey folks, Andrew Packer here. Welcome to Trading Tips. And this is Trading Tips. And you know, it's funny, when I started out investing, really around the age of 12, I started investing in stocks. But even as a younger kid, I used to start off just thinking, how can I get more money? How can I make my money work for me? How can I do those things that, make me an investor, that grow my wealth, and, hopefully in a way that, at least as a kid, can get around child labor laws and other inconvenient things like that. And my parents were incredibly supportive in that endeavor. They were very helpful. My father has a background in finance as well. And his idea was just, hey, I'm going to teach you all about how to value companies. And stock market, it's shares of a company. You're just owning a fractional part of a company. And in order to understand your investment, you need to understand what the company is. So my father's background approach to me was, here's how to study a company, here's how to learn its financial background, here's how to learn what its earnings are, what it does, and what its profit margins are, and those fun things. And frankly, that's all well and good. And as a kid, not having a lot of money to invest, being able to start out in the stock market with that approach, I think was a very good way to get going. And it's something I would recommend to anyone with a little extra money and kids who are interested in learning about that sort of thing. But that's not really trading. And that's because the fundamentals of a company do matter over time. But if you're looking to trade, you're not really looking at the potentially years that it can take for an investment like that to play out. You're looking to get in and out of the markets in a much shorter period of time. Now, usually when I trade options, even I kind of go toward a very long period of time, often months or maybe even a year and a half out if I'm using a leap strategy with a long-term anticipated equity. But the fact of the matter is, when you're trading, you can't just be looking at the market in terms of the fundamentals of what a company's doing, because over the short term, like the old Benjamin Graham saying, the stock market is a voting machine. In the long term, it's the weighing machine. And the weighing machine is where the fundamentals play in, but over the short term, a lot of different things can happen. And if you're looking at investing in a stock for the long term, I think it's a little crazy not to look at the price chart of a stock and see what's going on. And if you're a trader, this is absolutely where you need to zero in on making your investment decisions. Because over the short term, what's going on in a stock's chart can tell you a lot about what's going on in the short term and what's likely to happen. So why the reason for that? Well, there are a few simple reasons, but over the short term, little price movements typically indicate kind of where money's flowing in and out. Now, we've already looked in a previous video about finding kind of unusual options activity to see where some of the smart money is going in specific options plays, but that can happen in individual stocks as well, not just tiny little options. So when you see shares of a company doing something like this over time, where it's trending down, but there are these little like peaks and valleys here and there, that's an important skill to learn and to understand. Is this just a short-term change, or is this a fundamental change where the stock's actually going to end up trending higher from here? And that's where chart patterns come into play. And if you're a long-term investor in the stock market, most people just buy and hold. They're just playing one side of the market. But there's actually 3 different ways that the stock market can give you profits as an investor or trader. It can go up, but it can also go down. And it's a lot easier to play the market on the downside when you're playing with options, because you don't have to worry about the cost of shorting a company, which can be prohibitively expensive. When you're shorting a stock directly, for example, if it pays a dividend, you have to pay the dividend to that shareholder that you're borrowing shares from, in addition to having to pay them an interest rate for the borrowed money. So I think that makes it pretty crazy relative to just buying a put option where your risk is limited in that sort of trade. But even in between sort of this up and down, you can also get a sideways trend. And that's a little bit of what we've seen in the stock market in 2018, where year to date, it's just been struggling to, kind of make a big move either way. So as a trader, being able to understand what's going on and what sort of trend you're in is much more important than being a buy and hold investor, where you can buy and hold in any of these environments, collect some dividends along the way, maybe buy more shares if it gets a little cheaper and you still believe in the company, and then hope that it eventually goes to that upward pattern here. Now, in addition just to looking at these 3 different types of the ways the market moves, looking at chart patterns can also give you an idea of whether or not a trend is likely to continue doing what it's doing. In this case, if something's going up, it's going to keep going up. If something's going down, looking at chart patterns can give you an idea of whether or not it's going to keep going down, or whether something sideways is going to continue going sideways for the foreseeable future. So understanding whether or not a trend is going to continue, or whether it's going to reverse, in this case going from up to down, or in this case going from down to up, in this case going from a sideways trend to either down or up. Just understanding these different types of patterns, continuation, reversal, or even entering into a sideways trend, as up and down movements can do at extreme peaks and bottoms. These are important things to consider as well when looking at chart patterns. So in future videos, we'll be looking at a lot of these different styles in more detail and what you can look for as an investor to help you really pinpoint where a stock is likely to go in the short term, whether it's likely to go up or down or sideways, whether it's been doing that and is likely to continue or reverse, and the best way to use the options market to profit from when those opportunities occur. That way in the future, by the end of looking at these video series, if you see a chart sort of like this, you'll be able to say, hey, I've seen this pattern before, I know what's going to happen next, and how I can make money doing that. Because as soon as you recognize these patterns, and they play out most of the time in the market, you can profit again and again and again, no matter what the stock, just because you've been looking at the chart. It's a very different way from being a fundamental investor, which is where a lot of folks get started, or just buying stocks where a lot of folks get started before they move into kind of options trading and more riskier strategies. But it's an important one to know, especially if you've come from that fundamental background. And if you come from a technical background, this is something that's very recognizable and something where you can say, hey, here's where you can make, a little bit of money from a stock changing course, but I also want to show you how to combine that with the options market to, turn modest profits into larger profits time and time again. Okay, that'll wrap things up for this week's edition of Trading Tips. I'm Andrew Packer, wishing you good trading and good financial health.